Good morning, everybody. Happy Tuesday. Welcome back. We have some news today. Welcome to Daily Profit Plan. Let's get cracking. We had PPI and CPI, I think, both dropping today. I just finished up a live session. I think that's what we just had. So, US PPI, again, this is September data that's coming out now, but nothing super scary. Here is, if you can see my screen, let me make sure this is confirmed. Let me get the chat up for everybody. Yes, we're good. Good morning, traders. Okay. So news this morning that dropped at 8:30 a.m. We have producer price index year over year. Okay, so it was not CPI, just PPI. Right. Okay. So 8:30 producer price index year over year. 2.9 was the revision. So we had 2.8 upgraded or revised up to 2.9. Forecast was 2.7, came in at 2.6. So a lower print for year over year core PPI. And then if you look at the headline, forecasted 2.7, came in 2.7. Previous was 2.6, revised up to 2.7. I would say just nothing scary as far as like, oh man, inflation's going crazy. Not really. Retail sales monthly came in on par with expectations. Revision was revised slightly lower, 0.7 to 0.6. The market really was unchanged. We are slightly flat for the open today. Futures down about 0.1%. Versus, I mean, yesterday was a big gap to contend with. We survived the daily profit play yesterday. We had 67.10. We closed at 67.05. I put that in the chat for Telegram for members, like, hey, this might be a nail biter, but keep in there. I put in a defense trade that was offering up a $5 profit trap. I ate that trade, so I lost 50 cents, made $1, and netted positive profit on the day, which is fine. But that's why the defense trade there, in case it was a little bit flirty towards like the 15 to 20 zone, we could have had a nice little profit trap into the final minutes. I mean, it was close. I mean, this trade was up to 67.13. It's like I did see the positive gamma fluctuating between 6,700, 6,710, 6,720 towards the end of the day as things were a little bit noisy here. But, obviously needed price to get back below 67.10. That final 5-minute candle helped. We closed at 67.05. So VIX has retreated a decent amount from last week's highs at 28. We're all the way down to 20.2. That'll be kind of my pre-market measurement for current VIX. We'll see if VIX is going to go higher or lower for kind of top and bottom trades. One thing I want to just kind of throw it out there as a public service announcement is yesterday's move from start to finish was beyond the opening bell market maker move. I mean, we were looking at plus 65 pre-market, and the market was right around that price. So we opened up with a gap higher. We moved about 63 point. I mean, it was 64 points in the day. We saw the plus minus at 65. I know when opening bell hit, it was like a plus or minus 50, plus or minus 49. So I'm not really sure if market makers for intraday trading failed to do their job. And if so, does that help, kind of give us a good plan for today, which is they should just keep things contained within market maker moves. The issue is today, it's still a holiday lead up trading day. And I don't know if the market's going to keep like flowing with this inefficiency from Thursday. If we have positive gamma, which is right here, positive gamma above 66.95. So even with a slight softer open for futures, as long as this is within 0.05, 0.1%, if we stay above 66.95, this market is in positive gamma that could just lead this thing to more upside. So I look at my gamma levels. If I can sell my call side above 67.50, I look at my put side. I may be willing to go a little bit more aggressive on the deltas, but probably not, because from right here at 67, there's 67.50, there's 66.50. Today's plus or minus better be less than 50, because if it's not, I'm going to be putting my daily profit play right in the middle of these potential levels, which certainly are gettable. So if my call side is above, my put side is below, I would want to be above 67.50 and I want to be below 66.50. And to be safer, I'd want to be kind of below this gap, which is 100 points away. We have seen plenty of intraday swings here the last few weeks where we've had 80 to 100 plus points in a day. And whether it closes there, we don't know. Market makers still have to do the job. They've failed a couple of times, right? We've still managed to grab some profits. So anyway, let me get some comments there. Jeff says I closed at 70 cents. I mean, good. So one less thing you had to worry about, Jeff. The reason that I held longer is because I put a defense trade in at the top and I wanted to make sure I could cover my risk. So if I was putting a defense trade in that risked 50 cents, I needed to hold on to my daily profit a little bit longer just in case that was going to be a winner. So my defense trade lost 50. My broken wing trades never got filled, so those didn't get filled, and my daily profit play ended up making $1 on the day. So I mean, you don't for daily profit play, you never have to hold longer. If you're in that single trade for the day and you hit your 25 or 30% take the profit, be happy, move on. That's exactly what you want to do. Is just take the profit and keep moving on. Okay. All right, let's go to, I'm going to use, we're sort of at 20.24. I'll just use a rough calculation right now. 20.24. So 1.26. I'll keep an eye on this one. This is a 20.24. If we retreat lower, okay, fine. Let's look at our plus minus on the day. So 20.24. I recentered this at the close at 67.05. Let's do about a 1.26 move. We're going to have a pretty close, so even a slight gap of 0.1%, we'll have a pretty close area. I'll take the close from yesterday and go up 1.26, almost 1.27. So here, 1.2, so about 67.88. Oops. 67.88, potential top. VIX at 20.24. And previous close. So potential top there around 67.88. If we gap lower, that's fine. If we gap lower a little bit, 67.95 is positive, negative gamma pivot. So if we stay above that, this stays supported. Let's go down, I'm just going to go from the close here. I'll make a modification, but 1.24, 1.26, about 66.20. Again, potential doesn't mean if the VIX goes up, this is going to have to change. So potential bottom would be, I lost my number. So from previous close, this will be modified just a tiny bit, 1.26, about 66.20. $66.20 potential bottom. That's using the VIX. VIX at 20.24 and the previous close. So if we gap lower a little bit, I'll take that gap and I'll stretch that out. So that might move this down by about one strike. So maybe the 66.15 or so, depending on the gap size. But 66.20 ballpark, and then I'll get a keener look at the VIX. If we're going up or down, I'll make the necessary adjustment on those highs and lows. But hopefully we can see just another, market maker day. They should do their job. If they failed yesterday, let me get logged into my broker platform here. If they failed yesterday, it was like they hit the pre-market level rather than the opening bell level. So I think that's why it's important to also come into the markets, spot check the pre-market plus or minus, as well as the opening bell. I mean, there's clearly a lot more implied volatility like through the pre-market. And usually when it opens up, it's like, okay, market's in, volatility rarely goes like higher through the early morning. But I think it's important just to keep an eye out for that, pre-market plus minus. Okay, so speaking of plus minus, I'm looking at so a SPY shows a 408. SPX is probably going to be just over 40 points. 39.31 pre-market. Okay, so if you can see my option chain here, 39.31 pre-market. So it might be a little bit tighter today. Having a couple of slippery days through Thursday, Friday, yesterday even, we had a pretty decent amount of volatility. Hopefully we can see prices relatively calm and contained. So I want to just take a look and see like, okay, where are my deltas? Let's do our job. If I do a 15 delta, then I'm probably looking at that 25 to 30% take profit. If I do a 10 delta, I'll assess price action for the day and maybe go after a slightly bigger take profit. If I do both. Okay. Hopefully it's one of those days. But let me bring up some real-time gamma as well. Okay. Jeff, when you get a chance to watch that masterclass, let me know too. Yeah. Well, I mean, it's a 2-day masterclass from last week. That should be helpful to get you up to speed. All right. So we have 66.95 is our positive negative gamma. You can see here pre-market, probably the stickiest gamma to the upside is positive drift and positive gamma. So even if we're opening lower, I would say pre-market, this market has more of a tendency to be going higher this morning versus lower, just based on this opening setup. Um, so if you want to do a bear call spread, like a standard daily profit play, if you want to do a bear call spread, you want to keep those strikes above 67.40 or 67.50. So, plus or minus 40 on the day. It's going to be tough to pull in a lot of premium trying to go out like 60, 70, 80 points because it's just not going to be there. But if price is going up here for 30 to 40 points, let me see if that takes out Thursday's candle from last week. This high is nope. So if we went up to like 67.40, 67.50, it doesn't quite reach the highs of that NVIDIA sell-off. So that was our candle high from Thursday last week. I mean, if I was selling premium up there, it's like, number one, the market could be on a mission to try to reach it. And number two, it's like just on today's price action based on today's VIX, we shouldn't really get too much higher than I'd say 40 to 50. But pre-market gamma, that's what I'm seeing. Positive above 66.95 and some pretty big readings up here at 67.25, at 67.40. I actually wonder if today, from a double up standpoint, is if we hold here, could we get like a double up butterfly in this region? Maybe have like a low risk, high reward trade. Doesn't have to stay there for the day, but even if that just turned into a nice profitable trade, I wouldn't mind throwing something out there like that this morning if it's cheap enough to go out of the money. Maybe like a 25 to 30 point move higher. I mean, for 10 wide, maybe paying like $1. I mean, just over $1. Maybe pulling in a couple of bucks. So that could be a pretty good double up trade this morning. So keep an eye on that. Okay, that's pre-market. We'll see how this adjusts in real time. Biggest thing to me is as long as price is going to stay supported above 66.95. Okay, so even a slightly softer open, if we reclaim that right away, or even if we test and bounce off of it, positive gamma is above 66.95. So let's see what we have. We'll just see what our price action looks like for a daily profit play, see how far up or down I can go. I'll set my trade. It could be a type of day where if I go to my like 10, 11 deltas, it may not offer $1 and I'll just sit and wait for it to fill for $1 versus me chasing a lower credit. Right. So we'll see how that plays out. Let's spot check elsewhere. Just technically speaking, depending on the type of moving average you use, this is an exponential moving average. Let me show you the difference. I'm going to build out a new workspace really quickly. This chart's messy for your eyes, but I just, it's funny. Like I don't even see like the moving averages or the yellow boxes. I can still see price action, but I've done this for a while. So anyways, let's go. Simple MA, clean and fresh. And I'm going to use the same moving averages, but rather than exponential, I will move them to simple or smooth. Okay, so let's go get rid of that volume. Indicators. 1, 2, 3, 4, 5. Let's take a look at these. So 9 period. I'm going to go 21 and 50. 100. 144 and 200. Okay. So 200. Let's make this one a little bit thicker. And the 50, make this a little bit thicker. All right. So 21, 50, 100, and 144. So just a quick difference is we are not above the 50-day simple moving average. We are back above briefly. Are back above yesterday's close, back above the 50-day exponential moving average. I'm not saying one is better than the other. There's a little bit more lag in the simple than there is the exponential. I'm still, kind of needing to see price prove that I can get outside of this NVIDIA sell-off candle. Okay. So if today, for example, price is just a big nothing burger, we don't really go anywhere. It doesn't take out this candle high. It doesn't, obviously I don't want to see a lot of direction, preferably for daily profit play. But if we do see some direction, we'll have some defense in based on a VIX that's moving. But if it's just, kind of creeping back up where, okay, there's our Thursday candle, Friday recovery, Monday recovery, Tuesday recovery, fine. Now the question is, will price break above this and keep going? Okay. As vulnerable as I think the market is, it just hit me this morning. Actually, I don't know why I didn't think of this on that sell-off candle, but it just hit me this morning. If this is a left shoulder, head to neckline, why is the market vulnerable? Well, if we make a right shoulder and start coming back down to these lows, that's a very noisy spot, because if we break these lows, there might be a self-fulfilling pattern, which is not good. Okay. But if we bounce off this low, that neckline, and this happens a lot with head and shoulders, it might do something like this. It might be the perfect spot to make everyone uncomfortable. Will we break? Will we break? And you really have to be patient, let price action kind of guide you. Okay. So based on this structure right here, I'm still cautious as far as overall positioning. If we are trading inside of this for the rest of this week, I'm not surprised. If we come into next week and prices are breaking higher, there could be a run back to highs. Well, that will negate my head and shoulders pattern, right? But with two giant candles that essentially have established a low, if this is going to be some type of head and shoulders trade, I want to be cautious when this thing turns back over. It doesn't mean that I'm going to be bearish. It really doesn't, because there's tons and tons of fake head and shoulders patterns. But it does give me reason to be cautious. I still think that the trickiest pattern to watch for is that broadening pattern. I'll make this a little bit thicker. So this broadening pattern where the market can make, slightly higher highs and slightly lower lows. It's just a really noisy pattern where traders get over positioned. Everyone's bearish right now. Well, if it breaks the halfway point, everyone gets bullish. Well, they get bullish to a point and then they don't take any profit, and then it comes all the way back down to the halfway point again, or comes back down to the lows. This is some sideways area that we're gonna have to navigate. So again, just keep an eye on stuff. We'll watch this stuff every day. But that's some of the technical stuff I'm watching from, last week. And so we have the October 10th candle, November 20th candle. It does set up a potential head and shoulders pattern. But if we break above this NVIDIA sell-off candle and all of a sudden the S&P is back above 6775, 6800, it's not that far to reach 6920 again. If we're going to drift to all-time highs, it may be still eyeing that 7,000 plus target by the end of the year. Maybe it tests it. Maybe it doesn't close above it, but possibly a testing point if we're going to see some positive flows into the end of the year. Okay. But there's plenty of news coming into from now until New Year's. There's plenty of news, and it's all lagging, and nobody really knows what to do with it, but it's still going to hit the headlines. We're going to have employment data. We're going to have another Fed rate decision. We're going to have CPI data coming. We're going to have GDP. We're going to have, unemployment claims, blah, blah, blah. It's all coming. So, whether the market cares about that stuff or not, whether it's good or bad, whether the Fed switches policy again, I have no clue. But what a wild week of changing, the outlook on the Fed. 77, there's like 75 to 77% of a pause that has now been flipped. Probably one of the more aggressive I've seen in a long time. It's been flipped to now 85% probability the Fed will cut. So cutting in December, and then looks like we're pausing through Q1. Another cut potentially coming in April and June. This does surprise me too, that okay, so we cut in December and then we don't do anything. I guess technically in January, it's is Powell the Fed chair in January? I think that he still is. I don't think he officially steps away until April or May. I think it's May next year. When Jerome Powell resign as Fed chair. May. Okay. So that could be I mean, that makes sense why there'd be a pause. But you kind of have that kind of shadow Fed maybe sitting in there of like whoever it's going to be. I mean, I think we're up to 3, 4 names of who it could potentially be. But technically, Powell would be stepping down in May of 2026. All right, good stuff. Okay, really quickly, let me see if I can find do we have any notes on it today? What are we doing here? Give me one moment. All right. So high probability of the Fed cut in December. We will have some data sprinkled in. We're not going to get the typical non-farm payroll the first Friday of December. What's our calendar look like? So we have this week trading through Thanksgiving. 28th is a limited trading day. We come back and it's full December next week, Monday through Friday, the 1st through the 5th. I don't think we have non-farm payroll that week. We're going to have a lot of the jobs data, CPI, PPI stuff. It's going to be around the Fed rate decision, which is December 10th. So, I mean, if we're lucky, it's a noisy environment. I think if we're lucky, it's noisy to up. If we're unlucky and the market's going to continue to see this a bit of a deleveraging, or like don't be super nervous if the market is like slowly. Okay, if it's slowly grinding lower, don't be nervous because once the structure changes, we're probably right back up to the highs again. It could get a little dicey, but I really think that the market's ability to shed some risk and deleverage itself in a matter of a single day move, it really isn't a surprise. Like it's happening this year. I've never really seen the market do this in like a short stint, but like that little de-risking. It's like all that takes is one crazy day to get everyone to load up on puts, and all of a sudden the VIX is at a high and it retreats. I mean, the VIX went from 28 plus down to 20. The VIX is already starting to show that. You know, so point is, I'll watch the structure. If we break below the neckline, I'm certainly more concerned. I still think that, and I talked about this yesterday for waterfall income. If we are down in this area, I still have to consider taking some stabs as some strategy once in case this area will offer support. There's 2 levels that I said I want to be buying, right? It's either this 200-day moving average, which has arguably been a really reliable, buy zone and sell zone switch. So if we stay above this or we bounce off of it, as long as price is going to, hit the 200 and close above it, that's a good sign that we can put in some pretty strong support. If we come back to this previous resistance to offer support, you can see that they're right in the same spot. So that's really my next level of like, okay, I'll take a stab there, see if we can get back up to, a rally off of those lows. That would be about a 9% correction. If we have a 9+% correction in the S&P, we're probably going to have a 11, 12, 13% correction in the NASDAQ. And those are decent. I mean, I'm not saying it's like, oh, what a great discount. It's like, yeah, I mean, it's 8 to 10%. That is a great discount considering what we've been seeing. But what's funny is nobody likes to see how the market corrects. I mean, the market down here, it's like, yep, it was all the things built up to overbought conditions, and all of a sudden we had a little correction. And then it was trade war, and then it was this, and then it's like it's all these news events that just drive these like single day or these short-term sell-offs. I mean, if this gets a little bit more sustained to the downside, it's fine. But I keep making the argument like if this is orderly, if it's going to decline and it's orderly, just wait for this to bottom out, like kind of trough out, find some support, work its way back up, look for higher lows, and then we resume. And the market, kind of gets what we need. We have a sustained maybe 30, 60, 90-day correction, but it's not doing incredible damage to the market. There's still a lot of bullish posture in this market. There's still plenty of support. So does it make me a perma bull? I mean, I have been way less aggressive in this environment right here than I have when it was down, during February, March, and April. So what I did do is I took advantage of the VIX at 28. When it was at 25, I sold some premium. 25 again, sold some premium. 29, sold some premiums. 28 plus. Those levels to me, it's like I sold puts way down here. Okay. Way down here. I sold SPX, SPY, Qs. I did a trade on Costco and Google, like 50 to 60% out of the money. That's how far away it's like. I am not messing around with like whatever this noise is at the top. I'm not trying to get into the mud and figure out like, is the market going to go to all-time highs from here at 3 to 4% off all-time highs? Give me lots of room for error. Give me lots of forgiveness. Okay. All right, here we go. So market is open. Plus minus, we're looking at 39 now. It's 34. Things are going to be a lot tighter today. I can just tell with the plus minus move. I'd love to have my call side above 67.50, 55. Let me go to real time here. I mean, my big real time gamma levels are still 25 and 35 right now. Put side, it's again, the key level is we have to stay above 66.95 to kind of hold structure today. All right. Well, I can always crunch my numbers. I'll look at the VIX number here in just a moment. Plus minus on the morning. We opened a little bit lower. I could see some direction. I've got some gamma filling up here around 40. If I'm going to sell premium, I want it to be higher. I'm going to sell like the 50, 55 or the 55, 60, which I know right now is a very low delta, but that makes me a little bit more comfortable to sell a low delta and kind of keep things out of the way. So let me try it's a much lower delta than I really want. 50 to 55 and 25 by, so that's 90 cents. If I skew this where my put side credits are a little bit higher, 14 delta, that's a 14 delta and a 10 delta. I'm just gonna keep it simple, man. I'm gonna go delta neutral, go 10-10, and see if this will fill for $1. And that's it. Like, keep it delta neutral, sell it for $1, not settle for anything less. I'll keep an eye on it, and that way I can put in my defense trades if I want to. So pending order right now for daily profit play. It's a 50 by 55 on the call side. So these are coming in 10 seconds. Today is the 25th. Okay, trade is in and pending. So mid price right now is showing $1. Hopefully this gets up to like $1.05 and I can fill it $1. I think that's a pretty good looking trade. So that puts my calls up to about a 12 delta, and my puts, I'm keeping them around 10-ish. I went 20 and 15. Let's see what price is doing right now. I might make a small adjustment. I mean, 50, 55 here. It's okay. I'm just gonna keep it where it is. It's tempting to go like 40. See if I can get like 40 or 45. This might be a double up trade if I can find it. So double up here, 45, 45. Could I do 15 wide? That cost me $200. It's a little high on the risk side right now. 10, go 40. Let's see. 60 to 30. That's too much risk. Too much risk. Tighten this up to like 15 wide. This isn't bad. Can I get $14 for this? No, that's on the high end of the, I just got filled for a buck. I'm going to hold off on the double up right now. Just got filled at the daily profit play, so that trade is filled. All right, update that. Filled 9:34 a.m. Eastern Time. Entry. Okay, so looking for 70-cent debit or lower for profit target. Okay, now I might have to issue some defense trades just based on the VIX. All right, VIX is 20.08. I calculated around 20.24. So I'm doing a 50 by 55. I'll mark this up. So I'm selling the 50. And my put side is 20. 66.20. Okay, so I need to see if price will stay inside of this zone. So below this level, above this level, if price just chops around in here, should be looking for some good profit. Is there any way to look for December 24th volume to try to anticipate if there will be early tax harvesting last week of December? I mean, I can look and see. Trying to think. I mean, volatility might show if that's an event. Honestly, most of the time, like tax loss harvesting and mutual funds distributions are early December, not late December. Most of the time it's not end of the month. It's usually like beginning of December when mutual funds have to distribute. Um, and tax loss harvesting really starts like back in September. So the only thing I would really look at would be kind of forward volatility. But I looked at it last night. It's like I don't really see any higher implied volatility unless it's a major news announcement. So we've got, Jolt's job openings, FOMC, non-farm is going to be released like right after the FOMC meeting. I think it's going to be on that same Friday. So we have like the 10th and the 12th, or the following week on like the 17th. I'm not sure. Like all the stuff with U.S. news is so not normal right now because of the shutdowns. Like the data is all lagging. The data is coming in, delayed. So I think that the whole idea of like tax loss harvesting is going to be early December. So this is still a weakness window coming to the end of the month. I think we have like a 1 or 2 week vulnerable window. I could see, Kane and I talked about this yesterday in the Gamma report. I could see this year kind of behaving in a similar fashion to last year, which is the market doesn't really do anything. It gets a surge, it goes sideways, kind of gets at these highs again, doesn't really do a lot of damage. This is perfect for waterfall income, by the way. Like our waterfall income trades, we built out plenty of forgiveness on these trades. All we need the market to do is just kind of hang out here. Just try to hang in there, try to be stable, and we're gonna have some nice profits rolling in through the end of the year, right? I mean, our closest strike is 64.75. The reason I put that strike in is it's actually a pretty manageable risk. I'm risking like $450 to make 75 cents or a dollar, and I also have a $1,000 profit trap on top of that. So we might get lucky. Like if we're testing these lows again, we actually might get lucky with a $1,000 profit trap. If it's up here near the highs again, then we're just going to have, stacked up. I think we did the math yesterday, $6.85 of credit that we expect by the end of the year. And if we, don't land a profit trap, then we'll get most of that credit. We can take, 90% of that, 85% of that, 95% of that. We can let it go to expiration. So that's a pretty good chunk of income for the end of the year. If we land a profit trap, every profit trap we have right now for Waterfall Strategy 2 is $1,000. So if we land one of these and we still get most of the credit here, and we land $1,000 profit trap, there's an extra $10, right? So you go from expecting about $600 to the end of the year to now over $1,600 by the end of the year. Not too bad. I don't want to land all these profit traps because it clearly means something is falling or leaking a little bit lower. But if we stay like we did here, the market just refused to go down, refused to really go, gangbusters higher. And it was just a choppy, basically a 3-month window. But, there's resiliency in the market. That's for sure. All right. What else do we have here? Because of fees, I aim for 105 credit. Okay. I get it. I just think, look, fees matter, but it's the cost of doing business. There's no free lunch and trading options or futures. So I get it. Aim for $1.05. That's fine. If you get filled for $1.05 most of the time, it's a great fill. That covers your fees. You're getting a dollar, and ride that dollar for whatever you want profit wise. All right, 50. Let me see something. So that's right at my sell strike. I'm curious on the defense side. So if I went, this is tough. I'd have to go almost 15 wide here. If I went 60, 60, 15. I mean, that's not a bad. If we're gonna melt up to like 67, 50. So my gamma level is lighting up a little bit towards 50. It's within the 50% ATR, but plus or minus on the day was really quiet. Like, I mean, 40 points doesn't seem like a lot, but 40 points, if we stay within this realm, we might not test 50 today, right? We might just hang around this, positive, negative gamma pivot. We might have a really calm day where the market does next to nothing. And that type of, indecision day is kind of okay. I mean, plus or minus, this is a call and put sentiment. It's literally within a couple points of each other. So I can just see like a big fight today, and that's fine if prices are pretty calm. Let me see if I can get something around the open. So between maybe the 10 and again, as long as this is cheap enough, I don't mind throwing the risk in here. If I went 10, 30, 67, 80, that's a little bit more risk than I wanted. Hmm. 15, 15. I think it's just because it's all at the money. I thought I could tighten that risk up a little bit. 25 and 25. Yeah, never mind. I was going to see a price is just going to be choppy this morning. That's just a lot of risk. So I'll hold off on that for right now. I mean, daily profit looks good. Just kind of hang in there, let daily profit do its thing. All right, so daily profit up about $20 right now. If we're in session today and it's given us 30, 40, $50 profit for one contract trade, that's a good winner. That's a good winner. Okay. What do we have here? Closing orders. Sure. So I'm in the trade right here. So the trade is executed. This is what I do for Tasty all the time to help me organize. Is I highlight my legs here. So I highlight all these trades. Right click and go to group position. So let me ungroup this. So if I take these 4 trades that I put in this morning for daily profit play, this is what helps me keeps my trades really organized for all of my services and alerts. So WFS2 was their waterfall strategy 2. Let me see if I can find some project options edge in here. So I have pinch point, project options edge, news breakers, double ups, like whatever it is. I keep it organized. So daily profit play, come into my SPX. I typically group this up. So I just put DPP, and now I can take this order, which will highlight all these trades, and it's in for $1. So I have my trade price for $1, and right now it's up about about $25. Okay, so if I want to close this trade, right, and I'm like I said, I'm watching this trade closely. So if I'm going to close this at a 70-cent debit or a 60-cent debit or a whatever you want to close it at. Anything with a lesser debit is a winner, right? I get in $1 credit, I close it for 80 cents, 75 cents, 60 cents, whatever. That's the winner. So I will right click on this together. So all 4 of these are highlighted. And I go to close position. And then I set the debit where I want it. So if I go, let's say 50 debit, and I'll take $50 out of this trade. It's going to take probably 90 minutes to 2 hours to get this trade to close, especially if price is really calm. If price is really calm this morning, this trade should decay pretty quickly down to hopefully 50 cents. Okay. So if I want to close it at 50 or 70, then I just type in my 0.70. It's already trading at 75. I might get this thing filled, in the next maybe 10, 15 minutes. I'm going to go down a little bit lower and try to grab $50 today. Okay. So if I put a 0.50 and then send this order, now it's going to be a working position in my broker platform. The filled trade was $1, and my working order to close it is 50 cents. So you take the trade on together, you take it off together. I'm not closing out partials. I'm taking the whole trade as 4 legs, opening together, closing together. It's one ticket. Cool. Okay. So that's tasty trade. If you're in Thinkorswim, you can just go like issue opposite order. If you like highlight the trades or highlight the trade type, I think control is like the shortcut on the keyboard for Thinkorswim. That way you can like click, hold control, click another one, click another one, click another one, put those together, and then issue a closing order or issue like an opposite order. And so you open it as a credit, it closes for a debit. Okay, good stuff. Okay, good. So there's that. Filled for $1. Keep an eye on that this morning. What else? Sold some premium last week. Oh, what's up? Price action. Okay, well, that's not looking like I wanted it to look. Glad I didn't go 15 delta on the put side. So now our deltas have gone up a little bit. So we have a 13 delta put side. We're quite a bit out of the way. Market maker move around 40 points. Is the VIX going up right now? This might make me adjust my defense trades. So VIX is up to 21. All right. Well, I need to keep a close eye on this because now we're up to some fresh highs on VIX. It's 946. Let's keep an eye on this. So I'll make an adjustment here on potential tops. We're at 2105. I mean, to be safe, like let's see if the VIX maybe stalls around 22. What I don't want to see would be something like this, where it's like VIX does this intraday. Does VIX do something wild and crazy like that again? I would hope not. Like 2 days before Thanksgiving, I would hope not. But we are higher than when I calculated before, so that top and bottom is going to be a little bit modified now. Take your, take the current VIX value, 2108. Now I've got a 1.32% move. Okay, well, that matters. So I'm going to watch this and I'll make some adjustments, but I will go we opened here. I'm just going to use the opening price, which is lower, and look at 1.31%. So 1.31 takes us down to about 66.08. Okay, and that VIX is at 21.08. Now my gamma level is lighting up a little bit towards this like 6650. Okay, what would be bad news today? Coming back to fill this gap. That'd feel a little defeating to have a Friday turnaround, Monday turnaround, and then have the market give it all back in one day. Okay, again, none of this stuff is in our control. If market makers do their job today, they should not let prices fall from the open, which is around 97. We shouldn't be falling down past we shouldn't be falling down or closing below 57. Okay, so we opened here. We had about a plus or minus 40 on the day. 50, I'd say like 97 to 57. We should be seeing some support in here. If it's going to drop that far and drop that aggressively, we should see a bounce. Okay, that's a 50% ATR that's coming down to kind of test this open from yesterday. But I'm not going to stand in the way of this right now. And if the VIX continues to go up, I'm looking at maybe a defense trade, and I'll try to get this out of the way. Okay, so could I get a gap fill at 66.03? It's like watch the VIX. We're at 21.51. Okay, I already need to make an adjustment. 2151 divided by 16. Now it's a 1.34. 2151. And I'm going to go 1.34 from the gap lower. 1.34. About 6606. So for right now, I'm going to put like 100 to 6605. That takes into a little bit. That takes into account a little bit more VIX volatility. Okay. So I'm not going to prematurely call the bottom. We obviously want to see price stall a little bit, but again, look at how quick that flipped the negative gamma. Once we got below 95, I mean, that's a pretty big directional push. We're already down 50 points. So we open here, rally up to 14. We've dropped to 60. We're already down 50 plus points on the day. So what a difference like 5 or 10 minutes makes, huh? Now the question is, will market makers contain today's move and find some support? We are out of the way. I mean, our put side is quite a bit lower. We're all the way down to 65, or I'm sorry, 66.20. So it's not super safe. But if we have a quick directional move and it stabilizes here, works its way back up, then we just kind of chop around between this area, plus or minus on the day. As long as we're within 40 points, market makers are successful, and we did our job. Hopefully, we stayed out of the way. Yep. So 21.55 VIX. My last calculation was a 21.51. So I will keep making some little adjustments here. If I'm going to kind of call a spot right now, it's like, I don't think we're going to drop to 6,500 today. I mean, I don't think that's going to happen. I think if anything, this is, quick drop, stabilize, find market maker lows, come back into the middle. I'm just going to ride this out a little bit longer. Okay. So let's see if, and here's a good thing. If you want quick profits on daily profit play today, if price from this low right now comes right back up to center, there's probably some quick profits waiting for you, because that's a lot of volatility early in the morning. And if we come right back to center, we can usually see like 20, 30% right there at the open. So when we have like quick direction and it recenters, or quick direction it recenters, that generally gives us a pretty good profit like early on. That's usually how we can get out of the trade the fastest, if you're looking for like that 20, 25, 30% profit. Okay. Now look at the VIX. So spiked up around 21.74. Let me get that exact number here from the high. I've got a high at 21.77. So about 1.36. So 66.05, that matches there. And then I'll go from the closing bell and 1.36. $67.95. That was VIX at 21.77. Okay. So all I need is price to stay inside here, a little containment, little chop, typical daily profit play. Let's make some bucks. Okay, I've got some pretty solid gamma on both sides of this trade, so I would still think that the markets are going to be able to, kind of hang in there with like stable levels here, and just keep watching. I think there is a service I might be subscribing to here. Let me see what it looks like. Ah, dude, that's such a bogus special. Uh, Whatever. It was like, Black Friday stuff, 75% off, but I wanted annual, not monthly. So like get 75% of 1 month. I'm like, I don't want 1 month. So I don't know. It's expensive. It's annoying. All right, never mind. Now look at price. Right back to where we started. Noisy day. Take a look at our daily profit play. It's back in profit. So it's a lot of moving and shaking this morning. We're right back in the center. We had a pretty low delta fill. Let me see where my deltas are at right now. Right now, my call side is a 5 delta. My put side is retreated to a 16. It was up to like a 23 delta. Now it's a 16. So we're kind of back into those, pretty solid, like out of the money positions where we have a fairly high probability. This is an 87% chance of out of the money probability profit. This one is a 93% chance. So, I mean, we're getting some pretty good odds to kind of have price just kind of stay within market maker levels on the day, hopefully. But also, if I wanted to, see the VIX, if we poked up a high today at 21.77, I've got a pretty good idea of where this thing could go. I will put in my defense trades and try to pin this bad boy. So I'm going to try that 67, 90, 95, and 05. So try to get a profit trap in there for $1. Again, it's going to be difficult to fill, but I'm going to try. 90, 95, 05. I hate it when it does that. Oh, this needs to be a broken wing. There we go. So a 90, 95, 05, 90, 95, 05, 121 for $1 credit. There we go. So that's working. Bottom side, 6,600. I'll keep an eye on that. 66. If we fall again, this is right below my 10 delta puts. I'll go 66, 5, and skip for a low. Yeah. I was thinking if I can get 50 cents, I might take a trade now, but I'll hold off on that. So I'm going to pin the 95, skip a strike here, try to get a buck on that trade. All right. I'll post that screenshot. Again, this is based on a 2177 VIX. Okay. I'm going to set a chart alarm to see if this changes. Otherwise, that's our VIX high in the day. Okay. VIX high at 2177. I will post a screenshot of this for daily profit play. So these two working orders right here, if you want those as the defense trades we talked about last week in the masterclass. Okay. Defense trades, we talked about those at length last week in the 2-day masterclass. Basically, it's a way to use current volatility to defend any type of, if the market makers fail to do their job, I want pending orders that can potentially make me, okay, here's how the math works right now. I'm risking $400 on my daily profit play. If I have a broke wing butterfly that can make me an extra $1, that reduces my risk to $300. My broke wing butterfly also has a potential $600 winner, which will pay for my daily profit play at full risk and still make me net profit on the day. Now that's provided I get into the end of the day and finish in that profit trap. But even if I can wash away some of the risk, that's what I like to do. So we talked about that a lot with, understanding the core strategy and then calculating your defense trades based on the current VIX. So that's what the most important thing to me is watching the VIX, because when this changes, this is what happened last week, is the VIX changed so aggressively, you have to make those adjustments. Okay. 62. I mean, what's our, wow, look at the ADR. ADR at 100 points. If we have lows at 60, man, I mean, it's very possible we get some of these gamma levels today. I mean, that did not take long, right? We had two giant candles. We have two giant candles right back where we started. The gamma is filling right back up to the upside again, 20, 30, 40. Just interesting, like aggressive price action for the morning. So that'll have been a lovely cheat. It's just hard to find like, oh, we're down, 50 points at the open, and I'm just going to go like 100 points higher for an out of the money trade. Just it's a lot of price action. All right, we'll see. All right, so looking for that broken wing up here. I could put a couple more defense trades in. I don't want to get too flirty with the call side, but if this is a buy, sell, buy, it's another strike. I'm just trying to think of how I can defend this call side. If it's going to threaten 50 or 55, this broken wing might also offer a defense trade. Put this one in. Canceled. What? Oh, let's try. There we go. All right, see if I can put this in for $1. Okay, a couple pending orders there. Nice, Catherine. Holiday period with lower volume. Yep, it's look, lower volume for sure. So look, at the end of the day, today could be very noisy. We just had 10 minutes of action, 10 minutes of action, and maybe that's it. Like it's a bit of a scare both ways. It's just going to be like a typical market maker day, which to us is great. I just don't want to see a lot of floating direction. It honestly, like, it can be challenging trading during the holidays, and I know that technically, like, it's not the holiday today, but it's leading up to the holidays. So my least favorite window to trade is like the week of Thanksgiving, the week of Christmas, the week of New Year's. Like those weeks are like, do not risk a lot of money, because price can be kind of crazy. It is a lower volume environment, and when prices move, they tend to not have a counterparty. So when prices start to drift higher, it's like, this is why we calculate our tops and bottoms, which will prepare us for a lot more, like, being able to kind of call those tops will be a lot easier based on the current VIX. Okay. So let's just look, here's the deal. Daily profit leads have to wait. I mean, we're in the trade. We're already showing some profit. If you want to get out of the trade and take your winner, it's up 35%. Mechanically speaking, that's a great profit. Just take the profit. If I was trading 2-3 contracts, I'd probably be out. I'd be up to 80 to $100. But I'm just in a one contract trade. I'll hold this a little bit longer, see if I can grab like maybe 40 to $50 out of this thing, and that's totally doable. Things moving faster as day goes on. Maybe we're taking deal. I mean, whatever you want. If anything about the current price action is making you nervous, take your profit, move on. It's never worth like sitting in a trade that you don't want to be in. So you can close it, take the profit. And I'm just going to keep an eye on things. I'm going to watch the VIX, right? If this chart alarm goes off and we get above this 21.8 VIX, then I'll adjust my targets. So, I mean, this is kind of nuts. It's like straight up, straight down. Are we coming back up to break the highs again? I don't know. But if we break the highs, I will make an adjustment on my defense trade on the bottom. I'll just keep calculating out a kind of a new VIX calculation. Obviously, if it's going up like this, it's like that's kind of difficult to assess, like, where's the VIX going to stop going up? But if it's just like a little fluttering today and we don't go higher than 21.8, like we've kind of contained our highs and lows. So if anything, I mean, today just seems really noisy. This is kind of the crazy part about having a 20 plus VIX is 40, 50 points is like easy right now. And usually that's like an entire day's move. And now we're getting it like literally in 5-10 minutes. So it is pretty chaotic price action. Not going to lie. Rob says, I've lost money trying to defend, buy and call. Yeah, but that's why we're not doing credit spreads, Rob. We're doing broken wings. Broken wings give you a chance to make a profit trap. And we're literally, I'm telling you, man, if you don't know what I'm talking about, watch the masterclass. We have literally, like, I wouldn't do it if I didn't think it was accurate. If you take the VIX value, and here's a good example. If you take the VIX value here at 28.3, this VIX high was 28.27. Okay. 28.27. 28.27 divided by 16. 1.76. Take the NVIDIA candle, even with a crazy day like it was on Thursday, 1.76. The way that I calculate out our levels, you take the close, you go 1.77. Can everyone see that my low is right here? There's my low that I just calculated, and there was the closing bell low on Thursday. You can contain these tops and bottoms most of the time. All you have to do is stay dynamic with what the VIX is telling you. I wouldn't do it if I didn't think I could confidently have like 0-day highs and lows with a high degree of accuracy. Okay, so a broken wing offers credit and a profit trap and then some risk. That's on the call side. A put side would be credit, profit trap, and some risk. So I'm looking, generally when I take these trades, I'm looking at $1 credit. So if I get $1 credit, I love that trade. If I get, $2 credit, I freaking love that trade. But if I get a dollar to $2 credit, I have a $500 profit trap. I basically, decrease my line in the sand by 5 or 10 points. Or I should say increase my line in the sand. I get a bigger margin with a butterfly spread like this, a broken wing butterfly, than I would if I just did a call side, like a call spread or put spread. So that defense trade for me is like my ultimate pairing for daily profit play, because it doesn't have to fill, so it doesn't cost me anything. So the flip side of this is, well, Chris, couldn't we just do a butterfly spread? Yeah, but then you pay a debit. So if I win on daily profit play, which remember, I still plan to win daily profit play. So I don't want this trade for defense to cost me anything. If it gets filled for credit, it should be a high probability winner that can help mitigate some of my risk. Right? Remember, the entire plan is we still want to leave with profit on daily profit play. We expect to win daily profit play. So my defense trades, I don't want them to cost me anything. So I let them sit and marinate as a pending order. That way, if I get filled, yes, my daily profit play might still be in jeopardy. But if I make $100 here and I lose $400 here, my ability to come back and make $300 is easy, very easy. If I lose $400, I can still come back and recover from that, no problem. But what bothers me is if this is $100 and has a chance to make $200, $300, $400, $500, almost $600, I know that's got to be perfect, but I could still make $600, and I'm only risking $400. Okay, so putting these in the right places and keeping a really keeping an eye on VIX throughout the day does make a big difference. But those defense trades, to me, it's like the perfect pairing, because if we do, win the day, is it just because daily profit was a winner and this didn't get filled? Or is it because we had a daily profit winner and we had a broken wing butterfly fill? Then I make, let's say, $80, $90 out of daily profit and I make $100 on the broken wing. It's a pretty good day. But is there if I need it. Okay. Masterclass, Stephen, if you jump into the classroom inside of your daily profit play, I'll go to one-click trading. I'll show you right here. And then we had a live trade yesterday for a waterfall, which I'm going to talk about here in just a moment. So let's go daily profit play. This is inside your classroom. Come into your masterclass recordings, see all items. And we just did a 2-day workshop last week, November 18th, November 20th, 2-day workshop. And we also have some PDF notes. So if you're watching this video, go through the notes. If you're watching this video, look at the bottom of the notes. I put them together. Okay, so it says masterclass notes November 18th and 20th. It's just a PDF. Everything we do from pre-market checklist to what we're doing live in the class. I promise you, if you watch the video, all this makes sense. Okay, so if you just read the notes a la carte, it's like, what does this mean? But watch the video, it'll complement it really nicely. So watch this 2-day masterclass. This was really, really thorough. I mean, this was almost 2 hours long. You can watch it whatever speed you want, but I'm telling you, like from start to finish, I am the most proud and most happy of this class because it is a, for me, it's like a 3+ year refinement. For you, it's like a 14-month refinement. I'm going to continue to make my services as good as they can be. If I need to make changes, I will. If I need to make changes, I will. Does daily profit play work? Yes, a ton. What did I add to it lately? A defense trade to mitigate a risk. The most important thing with us in zero DTE is managing risk. If you do not manage risk in a zero environment, you are going to get your ass kicked. So you have to manage risk. So this is what I'm doing. Let's take the core strategy that wins us most of the time. We make money almost every day with daily profit play. But if I'm going to take a loss for a day that the market makers decide that they're not going to keep prices contained inside those expected moves, we need to have a plan B. You can't roll a zero DT and make it worth your while. You're going to roll it for higher fees and roll it for a debit, and you're going to roll it for a deeper hole. It's not worth it. So accept the risk. But the point is, if we have a way to offset the risk, where if I risk 400 and I could potentially lose a fraction of that, I'm better off by managing that risk, and then I can win the consistency as days come, day by day by day. Waterfall income, still one of my favorite strategies ever. Whether I am, actively trading week to week for swing trading the indexes, we have built out. I think we have 11 open positions. We're looking anywhere between $600 to $700 of income by the end of the year. Plus, I don't know. I don't want us to necessarily have a profit trap, but if we do, we have potentially like $1,000+ We literally have $11,000 worth of profit traps. And if one of them hits, it'll take care of a loss. It'll take care of some net profits. Like it's just one of my favorite strategies. It is also like, and this is me most of the time. I am cautiously bullish on these markets. I have been aggressively bullish a couple times in my career over trading for 25 years. Okay. And more of it's like 20+ years in the markets. I feel like I've seen a thing or two. I think I can figure a couple things out. COVID, I was really bullish. Okay. 2022, once we got into October, I was really bullish. 2025, this year, when we had the March, April corrections, I was really bullish because I was going so far out of the money on the VIX spiking up to 40, 50, 60. I just sold a bunch of premium. And those trades have literally paid me every month since April's bottom. And I have trades that are still expiring in December and January. And I'm still getting paid from those trades in March and April. So anyway, point is, if I think that I need to change the service to make it better performance-wise, to make it, easier to teach, to make modifications, that is my job. I'm not doing anything in any of my services to say like, I'm not going to use that anymore. These are all built on things that I like to trade. Okay. So discretion, hedging, technical volatility, high reward, low risk, earning season, index trading, and the phenomenon of dollar cost averaging with leverage with options, and daily income. They're all different, but they all work. Okay. All right. So Steve, on the masterclass, if you're inside of the classroom, if you're a Daily Profit member, jump in your classroom, go into this masterclass recording session or section, and check out the dates from last week. We did a 2-day masterclass on Tuesday, Thursday. Watch the first one. It's essentially an encore presentation. I did add some notes to the PDF here when we did the second class, but very, very thorough first session last week on Tuesday. We went pretty long on both of them, but really thorough from start to finish. So check it out. Cool. All right. Couple things for today. So I'm gonna get into waterfall income. One of my favorite strategies. We have some open positions. I just took a trade yesterday that is still valid. If you want to take it, it might actually offer up similar credit. We went, I want to say like 10, 11% lower than current price. So we're giving ourselves like a 15 or 60% buffer from all-time highs and still grabbing about $50 to $55 of income. And we're just kind of stacking that in with our other trades. So I'll talk about that. I've taught waterfall income a lot the last month or two. There's probably 10 classes that I've taught live, repeating strategy one, strategy two. So one thing I'll do here, I'll just show this, just kind of get you prepped. If you come into, let's say you jump into waterfall income. Okay, so you get into your classroom here, waterfall income. So I'll read through waterfall income. You jump into class today, and you check it out in your one-click trading member portal. Go to waterfall income. Every alert that I post, from trade management to new trades, is all right here. So this was a closed trade for a winner. This was a new trade from last week. Or I'm sorry, this is a new trade from today. Yesterday, Monday. We trade on Mondays at 11:30. So everything is in your alert section. If you go to your classrooms, let's go waterfall income. Go into your same masterclass and live sessions. See all the items here. They are time-stamped. You can see that I've taught a lot of this class. Okay, the last masterclass we did was a November 11th masterclass, November 14th masterclass, November 11th masterclass. Okay, I teach a lot of these where they're in two sections. I'll do a strategy 1 and a strategy 2. You can literally watch any of these classes. Okay, August 20th, strategy 1. August 21st, strategy 2. September 8th, strategy 1. September 9th, strategy 2. September, let's see here. This is October 9th and 10th, 13th and 20th, masterclasses. Strategy 1, strategy 2. If it's in the same week, it's a strategy 1 masterclass and a strategy 2 masterclass. Okay, the latest one, strategy 1, is November 11th. That was just over a week ago. November 14th, masterclass strategy 2, just over a week ago. So best way to catch up is just watch the masterclasses. Am I going to teach you this week? No. The reason why is because I have a practical options and a anatomy of a trade segment that I'm doing today, tomorrow, just for everyone. I mentioned this yesterday. If you're in my daily profit play session, I'm going to be reviewing today and tomorrow anatomy of a trade. Whatever strategy you want me to discuss, I will discuss. If you bring me a strategy, I will unpack it. Butterflies, iron butterflies, jade lizards, diagonal spreads, calendar spreads, long short straddles, long short strangles, ratio spreads, covered calls. Okay. I don't care what you want to bring. What I'm saying is this is going to be a rapid fire. There's a lot of stuff to talk about. What I will do is I'll keep it on the same asset. So all you have to do is tell me, Chris, I want to trade the S&P and I'm bullish. Well, let's talk about ways to trade the S&P bullish. Chris, I want to trade the S&P bearish. Let's talk about the S&P bearish. Chris, I think it's going to go sideways for the next month. I want to trade it sideways. Let's talk about trading the S&P sideways. And you can take that and put that on any instrument you want. You want to trade NASDAQ. You want to trade S&P. You want to trade Tesla. You want to trade NVIDIA. You want to trade Palantir. You want to trade some freaking penny. No, don't trade penny stocks. But any major like liquid stock with a lot of option volume, you can do all this stuff. You want to trade gold. You want to trade silver. Same thing. Okay. So if there are other strategies that you want me to talk about today, let me know. But I'm going to start with this list. And, butterfly, iron butterfly, to me, that is a low risk, high reward strategy. Jade lizard, that's a creative way to basically, have a naked put on something, but also have a little bit more credit if you're doing a combination of a naked put and a, It'd be a naked put and a bear call spread would be a jade lizard. You can do a reverse jade lizard, which would be you buy protection to the downside and you sell a call. But I would do that if you own shares. I wouldn't want to have a call that's naked. But anyway, jade lizard is like selling puts, but with a combo there. Calendar spread. Calendar spreads are great. A lot of traders love them. I like the diagonal spread a lot more because you're going two different strikes. You're going out different times. I use the diagonal spread where it's the long dated option is like my call side. My sell side is going to be against that, so I can reduce the size of my debit. We'll talk about that today. Straddles are always at the monies. Strangles are out of the monies. And you can be long and short. So like earnings plays, a lot of people love to do a long straddle at earnings. It's my least favorite trade because oftentimes you're paying way more for premium. Last week NVIDIA, if you remember the earnings print. So the average earnings move about 5.66%, which should have been about a $10.50 move. The market makers had about a $12 move expected. And if you did a long straddle on NVIDIA, you're going to pay 1330 to 1350, which means you're paying more than what the market makers and the average earnings print's going to give you. And sure enough, if you paid for those premiums, you got disappointed on both sides of the trade. Even with the gap up, even with the flush down on Thursday, both long and short straddle traders, unless you literally protected profit early in the morning on Thursday when the market was gapping up and it opened, if you didn't protect profit, you would have lost everything on that call side. And if you held the put side, think you're going to be right, you probably would have lost everything on the put side by Friday. So just like that, the option traders that were long got crushed on both sides of it, which isn't a surprise. Okay, ratio spreads. I trade a lot of ratio spreads for my project options edge. Okay, covered calls. If you own stocks, covered calls can be your best friend. Yes, you're going to cap your upside, but you are going to lower your cost base and generate some income. Okay, I do a lot of covered calls on everything that I own because I'm constantly trying to work my cost bases lower. I don't mind letting stocks go. If they get called away, I will always reestablish a position if I like it. Collar trades, it's the free financing, it's the free protection. So you can sell a covered call and buy a put, have downside protection, and still generate some income. And also in a lighter way, you can lower your cost basis. So that's the sneak peek. We're going to talk a lot about this stuff today. I'm going to be live at 1:30 p.m. 1:30 p.m. Okay, I'm going to push this out. So I'm trying to think. I can run this on Zoom. I'm going to see if I can run this on my YouTube session, or it depends on if Prosperity Pub wants to push it, then it'll be live in Zoom. I'll post it in my Telegram channel, and we'll push on youtube.com/financial wars. I'm still going to take that recording and post it in my my personal YouTube, which is youtube.com/Chris Pulver. Okay. So I think the best way to join will be, I'll post if you're in my Telegram. So if you're in my Telegram, here you go. So there, I started to post this. Anatomy trade session. See you there, 1:30 p.m. We'll post a link for that. All right. So here's my Telegram. Most of you are in this, but if you're not, here's my Telegram. Chris Pulver Telegram. There you go. So if you're in that Telegram, I'll post that link. Also, look for youtube.com/financial wars, 1:30 p.m. Eastern time. If you go to that channel, you'll see it live and you can watch. Okay. All right. So right now, daily profit is still looking pretty good. We're up about 30% on the trade, maybe a little bit more. Let me check on this right now. It's trading for about a 65-cent debit. 67, 65, 70 cents. That's fine. If you're happy to take some profit, take it. No harm, no foul. I'm going to look for like that. Since price is noisy today, so far so good. I'm going to see if this is just a big shakeout in the morning, and then we just kind of stall in for the day and hang around this positive negative gamma pivot. And so I'm going to try to pull a little bit more out of this if I can this morning. Okay, I'll keep an eye on this on my other screen. Waterfall income. We just took a trade yesterday. It got filled. I like it. We have some open positions. They're still valid. The trade I took yesterday is still valid. If you want to take this, one of my favorite strategies of all time. This strategy alone, my waterfall income strategy 2, has helped me survive COVID, 2022's bear market, helped me survive Liberation Day this year. We took one loss during Liberation Day. It was because we had an expiration in February. Price started to roll down, and we got caught with like the high expirations on a strategy 1, which wasn't a big loss, by the way, but it was still a one loss. And then by the time we hit down to our bottoms in April, back up into April and May, we were back in a profit on literally every trade. We haven't had a single losing trade since like the loss we took in February, that expiration, just because, I mean, what's funny is, if you ever heard Michael Jordan's quote, I've never lost a game, I just ran out of time. That's kind of how the strategy works too. Yes, we could have trades if we had the wrong time horizon, but if we give the market enough time, we can always make money in these trades. So anyway, my point is, I survived Liberation Day very well with only one loss. Everything else has been winners. Survived 2022. Actually made a lot of money in 2022 with the strategy because I did hit several profit traps, which are big fat winners. Survived COVID. Survived 2019 volatility event. Survived 2018 volatility event. Survived, the melt up in 2017. It's been one of my favorite cautiously bullish or bullish strategies, period. When I'm to the point where I'm just managing my own capital, this is probably going to be one of my safest ways to generate whatever returns I'm gaining. If I'm looking for, all right, I want to make like a pretty safe 10% a year, this is one of the easiest ways to do it. If I want to generate 15 to 20%, I got to step on the gas a little bit, but I know how to do it. It's a very dynamic strategy one, strategy two. They're also very different, but man, they're freaking great. I love these strategies. It's also one of the few strategies that I'm blanket trading in my entire portfolio. For all the accounts that I look after, I'm blanket trading this, which means everyone's getting some pretty simple income trades every week. Okay. All right. So live trading with the service, we have 110 live trades. Win rate is 93%. Our average winner is 16%. That includes winners and losers. Average hold time, 12 days. It varies. If we're doing strategy one, our average hold time is about 12 days. Strategy two, our average hold time is 30 to 40 days, just because we're willing to hold a little bit longer because we have some profit trust built in. We can't guarantee specific huge results. There's risk in trading. The deal. Check our terms and conditions on the Trading Pub homepage. In trading, I can't emphasize enough, there will be losers. There's no black box miracle system that prints out trades automatically. My research is to help traders get an edge in the markets. You are playing with a house edge in the markets. You have to believe that this market is built and designed to go higher. There are tools and resources and backstops and levers in place to keep this market grinding higher. To be a bear is just going to set you up for frustration, exhaustion, and failure. So, there's a time to get in. There's a time to be more aggressive. There's a time to stay out. There's a time to de-risk and deleverage. But for the most part, just like the market just greases the wheels. And it's amazing how much longer a bull market can last. Bear markets will happen, yes. But point is based on how much risk you take, you got to be able to stomach, the little emotional swings that come with like winners and losers. I try to tell traders this: once you get to the point emotionally that a winner or a loser feels about the same, you're ready to be a trader. Okay. I think the best way to do that personally is to trade with proper sizing, which means trade small, make a win and loss feel insignificant. You can be annoyed with the loss. I'm always annoyed when I lose, but I'm never done, right? I can show up and trade the next day. I can get it back in a day or two or a couple days. I'm never revenge trading. I just stick to a good plan and a good process. Okay. All right. As always, I appreciate everyone being here every single day for Daily Profit Play. I really do appreciate that. Having a nice crowd every single morning. This is going on 26 years in the market. I trade everything. I've spent tens of thousands of hours in the markets trading and teaching. I've certainly seen a thing or two. But what has happened the last few months, what's happened in 2025, just as a whole, has been really alarming. So governments around the world have become pretty reckless. We are seeing some of the biggest fiscal spending habits that we have ever seen globally. China printed $5 trillion last fall. They're continuing to do that to backstop property markets and stock markets. The Eurozone, for the first time in a while, has come out to spend money. They have been like one of the most austerity-driven continents and nations for a long time, the Eurozone with the bloc. And they're finally spending on defense. $1 trillion. They have energy needs. They're looking at this AI stuff as well. We're trying to be allies with the Eurozone, but tariffs were disrupted this year. Anyway, they're spending money. The U.S., of course, we're spending money. Fiscal dominance, fiscal policy, it will not slow down, and the Fed is not stepping in the way either. So we have really powerful forces at work with monetary policy and fiscal policy. And inevitably, what is leading to is we have sticky inflation. We have global yields that will not go down. Okay. So we've seen, yes, 2022, we peaked at inflation. Everyone right now is feeling the K-shaped economy in some way, shape, or form because life is more expensive. I know you all care about your family's financial future, so pay close attention. This is an income technique that can help you handle the rising cost of living. We have had 104 winning trades in the service in the last year. Join me for my 105th. Join me for your first. Okay. But think about this for a moment. We're going to talk about risk today that, 5K risk is not nothing. 5K risk is a decent chunk. But on that 5K risk, I can generate about $1,000 every single week, like clockwork. Okay. If a 5K risk is too much, risk less. You want to risk 1,000, you're going to make $200. You want to risk 500, you can make 100 every single week, like clockwork. Okay. So about 20% return on your capital every single week. One trade, one ticker, same time each week. And I do mean that literally. One trade, one ticker once a week. Here's Monday, March 4th, 11:59. We are live together at 11:30 a.m. Take the trade, shut down the computer, check out the rest of the week. And when everything works out, that 5K risk is generating 1144 in income a few days later. The very next week, March 11th, same time, same place, few days go by. Trade automatically closes out for you. 1186 in your broker account on a 5K risk. The next week, same thing, rinse and repeat. 1297 on the 5K risk. Final Monday was no different. Same day, same time, same ticker. 1150 in income on that 5K risk. Even when the stock market went down, that's almost $4,800 in profit for the month of March. One trade, one ticker, the same time each week. Weekly windfalls is what they call this. These are weekly income payouts. Okay, we have been paid through up, down, and sideways markets with waterfall income. This is one of the strongest, silkiest, smoothest equity curves I have ever seen in a strategy. I would put this up, and this is risk defined, by the way. So we're always capping the downside, and we expect to win 97.1% of the trades over the last 12 years. So what does that look like? Well, take 100 trades with me. We're winning 97 out of 100. That feels pretty good. Okay. So now you can see why I'm excited to share this with you. What I will do by the end of today's session is I'll show you what I'm trading every Monday at 11:59 a.m. We go live at 11:30. We get a little prep in, and the trade alert goes out by noon. But I want to be very clear. This isn't a guarantee. This isn't instant income magic pill. This certainly isn't a home run trade. This is an approach that is designed to help us it's given us an opportunity to target steady income on a weekly basis. Reliable, steady, consistent probability, weekly basis income, okay? You don't have to have a multi-million dollar retirement account. If you have a couple hundred